Good morning. It's Wednesday, April 3rd, about 5:30 a.m. Central Time. Over at the precious metals are higher. After yesterday, we saw significant capital inflows into the precious metals and out of U.S. equities and cryptocurrencies. It was the safe haven trade that really fueled this second leg of this rally, and it was Israel striking Iranian assets within Syria and also North Korea test firing some missiles in the evening hours that really brought this speculative buying. The bottom line is that geopolitical tensions, rampant fiscal spending, and relentless central bank buying has improved investor sentiment and driven this speculative frenzy just recently here in the precious metals. So while everyone is slightly leaning one direction, I always like to know kind of what my enemy is doing and kind of prepare for that. So for now, it appears that the Fed has achieved its soft landing goal, that manufacturing activity will continue to expand, boosting copper and silver demand, as well as economic growth will remain strong throughout 2024. So while it occurs that inflation may also remain at these elevated levels, the Federal Reserve might keep its higher for longer target in place. So what we're going to really want to keep an eye on here is the dollar index and the possibility of another rotation. If we do see the dollar index continue to break down, it should light a fuse under gold, silver, copper, and also the crude oil market. Now, if we do have some critical levels breached on the dollar index, this may cause a pullback and a correction, which we will welcome for long-term positioning in the precious metals markets. That level that you need to write down on the dollar index is going to be the 105 level. Pull up a daily chart, print it out, draw a line at 105. You see a breach of that level for any kind of consistent period of time, say 1 hour, then you are probably going to see a correction begin in the precious metals markets. Looking at the U.S. equity markets, we did have a big outflow yesterday, but if you look at the chart, it's been an upward trend here, and it's been very difficult to pick these tops in the U.S. equities and at least get short and stay short. So your critical level of support on the S&P 500, 5240 down to 5230. I think if we can hold the 5230 level, we should see a retracement back up to 5270. Now looking at some other things, Bitcoin looks like a bargain at these levels with the possibility of a trade back up to 70,000. Oil looks slightly overbought at this level, and the gold-silver ratio, silver is finally playing some degree of catch-up, but when you back up and you look at the ratio itself, about 85 to 1 has been the floor. We're currently trading right around 86, 87 to 1, and then the upward ceiling where silver has been stretched a bit too thin against that gold market is 92 to 1, all given this current year. So today and throughout the rest of the week, the primary focus is still going to be that jobs report later in the week on Friday. I think that that's going to dictate really the trajectory here going forward. Is it going to be another path higher, or are we going to start to consolidate and break down? Yesterday, I outlined some key levels that we're looking at here. There's a gap on the chart in the gold market, 2238.40. That's kind of that level. If we start breaching into the gap, we'll want to look to step a toe in the water there. 2200, I wouldn't wait for that exact number, maybe 2205 or so before you add a second level. And then of course your line in the sand is going to be 2170, and we'll see how well gold tends to defend that. What could kill this complete rally in the gold is a couple things. One, the 2-year note holding an elevated level, the dollar index breaking over 105, and central bank buying. If it really starts to curb and it starts to dry up, we've seen a big rotation out of foreign central banks holding foreign currencies, and what they're doing is they're repatriating, trying to strengthen their own currency, which many of these currencies is sold off dramatically against the US dollar, and they want to put that currency to work in the gold market here, holding for longer term price appreciation. So those are some critical things we're watching. Again, on the silver market, I do believe that we're a little bit overstretched, but if this is it, we do have some option plays for you. We've been picking out some call options in the July contract on silver, also on August in the gold contract. And then again, On copper, we like copper below $4, around that $3.98 level. We see long-term value. Platinum on the July basis going to be a little bit higher than 900. We didn't breach 900 the last time, and if you could get any sell-off below 900, we would justify that as another possible entry point. I'll be on the Schwab network here at 7:15. I'll also be doing 2 TV spots for the CME group, one on the energy sector and one on the precious metals. So you got any questions, give me a call. I'd love to talk to you. A lot of you that traded other different firms and things like that, we love to welcome you over here. We get you on the platform and everything that's comparable. We have better margin requirements. Our margin requirements are whatever the lowest that the exchange will publish out here. So if margins are an issue, if they're unable to provide you with a product you like to trade, like the cryptocurrencies or on silver, it's going to be the options going forward. They'll probably cut that off, and they'll probably start raising those margin requirements on the silver futures if it starts to get heated up. I've experienced this several times, especially with your deep discount futures trading firms. You got any questions, give me a call. Love to talk to you at 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.